Hi there, traders. This is Brad Gilbert with the FX Market Insight for the 15th of November. All right, now let's just rip into it. The first stage of a Brexit deal. Okay, I can't wait for this to be over. It's just causing complete havoc across all sort of major currency pairs. The deal has been agreed by the UK and Europe. Theresa May has gone back to a cabinet and got approval from them. It now needs to be qualified by Parliament, and they'll vote on that next week. So hopefully we are getting very close to the final details of Brexit, and then we can just get on with trading sterling on the fundamentals, because at the moment it is an absolute schmozzle. Now, let me just give you a look at what's been happening here. So that Brexit deal sort of came out late in the North American session. Just have a look at sterling here, the price action. A good 150 points up and down 3 or 4 or 5 times over the course of the last sort of day and a bit. Now, this is just crazy sort of price action. Untradeable unless you're a politician and you're sitting in these meetings, you'd be killing it. But at the moment, it does create a lot of issues. And what it's done is, overall, okay, look at the dollar index. The dollar index is just having a bit of a breather. The US CPI numbers pretty much as expected. You know, if anything, just a wee bit less. So slightly less CPI, I'll go with that. And this Brexit deal, which is, you know, UK strong, pushes the dollar down. That's just seen the dollar index sort of drift off its perch somewhat, and has the dollar in a pretty much sideways technical framework. Of course, fundamentals for the US dollar are still strong, but fundamentally it's just back drifting sideways within recent ranges. And that's caused a little bit of havoc on some of these other major currency pairs. So if you have a look at Euro, I mean, it's very sort of robust. Down move is sort of stalled at this stage as it broke back through 112.80. We're sitting around 113.20. No one really wants to buy it. To me, I'm still bearish Euro. There's nothing to be positive about in Europe. You take away Brexit, which is, you know, good for the whole European setup, but that's such a short-term thing. I think we'll start to see the US dollar start to climb again. As I said, those CPI numbers were pretty much on par. Sideways trading for sterling, I call it sideways in about a 200-point range, if you can manage that. Now, the Aussie dollar has sort of benefited from that slight weakness in the US dollar. You know, either you could say it was going with sterling or with the US dollar negative sentiment. It hasn't gone a long way. Okay, we've got employment numbers today. That's why the Aussie dollar will be a major focus. The Kiwi, the battler, okay, if anything, out of all the currency pairs, it's holding up the most against the US dollar. Now, I've got Kiwi fundamentals as strong, US fundamentals as strong. You'd think this thing would be going sideways, but technically it is still edging higher, a lot stronger than the Aussie dollar. Now, dollar yen, pretty much sideways. It's just drifted sideways through a trend line here. It hasn't broken for a week or two. So, of course, we've seen a few stop losses triggered, but that's it. It's now back in the range. Those stop losses have been done. Dollar Swiss on the hourlies, still going up, but trading sideways the last sort of day and a half. Dollar CAD, oil at 50, just under 56 bucks. It is still moving higher on the daily and weekly charts. On the hourlies, you can say it's just trading a little bit sideways, but overall it's moving up. And as I mentioned already, the dollar index is having a bit of a breather. It hasn't come off far, but that strong sterling move was enough to knock it off its perch at this stage. Now, let me just give you a quick look at those numbers. Just want you to understand where we are with the US CPI numbers now. Fundamentally, right, we expect the Fed to raise rates in December, and these CPI numbers down here do not change that perception. Okay, you got the core number at 2.1%. Yeah, they're expecting 2.2, but still it's above their 2% band. Month on month, it's strong. Prior number was 0.1, and then you've got the seasonally adjusted 2.5%. So basically, US fundamentals are strong, and that should give us, you know, the backbone of a strong dollar. Now, if I just bring you across to have a look at the dollar, let me just change the screens there. Okay, so what we're looking at is, as I said, the dollar index, and you've also got the big dark horse here, dollar yuan, which is, you know, they call it offshore yuan. It's had a little peak up at 96, back down into the 94s. We're still waiting for some clearer direction. Once the Brexit news settles down, I think we'll get some Chinese news from Trump, whether they are going to increase tariffs or not, or they do a deal, and that'll determine where that $1 goes. Now, equity markets, still not completely chuffed with the whole Brexit deal. A sea of red at this stage. Now, it's not a huge move, but heading towards minus 1% for the US equities is going to paint a red picture across the Asian and European equities, you'd think, as we go forward. Now, Europe, they may sort of see this Brexit deal as a really good thing, and you may see a bounce in the equity markets there. We'll have to wait and see. The dollar index, as I mentioned before, it is still overall trading higher. It broke through 97.10. It was a long-term resistance line. It now seems to be hugging that line with no serious direction. I'm not sort of getting caught up here and thinking dollars going up or down. At this stage, to me, it's a little bit sideways with an upward bias, okay? That's the way I'm looking at it. Now, if I just bring you across, so actually let me just give you a look at where the focus is for today. Okay, we've got a few good things coming out today. Now, if I just bring up my FX Trading Hub, let me just blow that up. Okay, so just looking at the overall picture now, once again, the Brexit, okay, I know a lot of people think it just relates to sterling, but it's sterling against the dollar, so it is driving the dollar down against other pairs, right? So it is impacting all currency pairs at this stage. Now, what you want to do is focus on the upcoming events, right? Have we got clear direction in the major currency pairs? Well, the thing you should be looking for is, let's clear that screen, is coming down here to look at the pairs at the moment as they sit, right? So to me, euro is still bearish, dollar yen sideways, dollar Swiss and dollar CAD, which we're sitting yesterday in a little bit of a bullish mode. There's been no change, but they are back above some key levels. So they, to me, look like they're set to move higher, whereas the US dollar is still in a bullish mode fundamentally, but technically it's trading sideways. So Kiwi battling strong US fundamentals. Overall, it should move sideways, but at the moment is moving up, and the Aussie is definitely in limbo. This thing is not really sure where it's going whilst Brexit continues as well. So, and that's a bit of a shame because we do have key Aussie employment numbers out today. We've got UK retail sales figures and a couple of other things. Let me just scroll back up and just guide you through this. This is where you've got to really pay attention because this is where momentum can shift very quickly. So just looking at the overall numbers, the Asian session, the Aussie numbers are going to be the key numbers. Now, they're out in just over 10 or 15 minutes. We want to focus on those if I can get this video up. For the UK European session, the major driver is going to be UK retail sales, but I'd say that's going to have very little impact, especially with this fresh Brexit news, right? The debate in Parliament over whether they take this deal will be the key to it. I think the fundamentals at this stage in the UK will be pushed aside, but we do have another cracking opportunity for the dollar to get some direction, and that'll come via way of the US retail sales. Actually, just looking at that, I didn't realise we're having an issue with the calendar. The employment numbers should be sitting here, the Aussie employment numbers. So that's the way it falls. Aussie employment numbers, UK retail sales, and US retail sales. Out of all of those, the Aussie data is going to be an opportunity for sure. But to me, the standout is the US retail sales figures. They are the go-to. I'm looking for direction on the dollar. That'll give me direction on the other major currency pairs. I'm leaving out sterling at this point. All right, guys, that's it for today. We've got some more data coming out tomorrow, but that's where the major focus will be. As I said, when you look at the major currency pairs at this stage, it's a tough trade to work out exactly where things are going, right? And if I just give you a look at that, one thing you can do, if you're not sure about things, always flip over to the daily charts. It'll take away the noise of the hourly charts, and you can see a bit more what's going on. So you can see that breakdown in euro. It's now coming back to test. It is sort of uncertain. To me, it's bearish, but we're at a critical level. Sterling, well, just been trading sideways in a very aggressive range. Aussie broke higher, but he's now trading sideways. Kiwi broke higher, and he's starting to surge to the top side. Dollar yen, well, overall in the daily is up, but a little bit sideways. Dollar Swiss, this is where the dollar is starting to move. Dollar Swiss and dollar CAD. The dollar is still strong fundamentally. And you can see here, overall it's going up, but just on the hourlies, it's sort of just folding over in itself. And that's mainly because of this sterling news, not because of weak US dollar news. So don't get confused. I think the US dollar has still got the best fundamentals across the board. All right, guys, that's it from me. Have a great trade day. I'll see you in the live trade zone. Cheerio.